All right, guys, good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of GAR Capital. Thank you so much for taking the time out of your day to join me this morning and every morning at 9 a.m. Eastern Standard Time here on the YouTube channel. It is the Morning Note. Rock and roll. We got a lot to cover in terms of technicals today. It's going to be a very focused technical session. We're going to talk about some key inflection points on the S&P. That means we're going to go over the S&P 500 futures, since obviously SPY I only have pre-market and aftermarket movers in the 1 hour. You don't get that in the daily chart. So at least to broaden our horizon, pre-market, we have to use S&P 500 futures. So we'll go over that here in a second. Good to have you on board. Let's go ahead and go around the horn. Dow futures are up 59 points, NASDAQ up 0.27%, S&P up 0.18%. Yesterday, the S&P drop was the worst since December 15th and the worst of 2023. But again, if you've been watching the channel, listening to the podcast, that's my keys. Listen to the podcast, read the newsletters, watch the videos. Again, and on our tweets, we were talking about seasonality. We talked about towards the tail end of February is the weakest points of the year. So again, none of this should have been surprising to you. So again, we are still looking for that retest of that trend line. We'll go over that here in a second. Crude oil futures are down 0.64%. Gasoline futures are flat at $2.62 a barrel. 10-year treasury yields pulling back a little bit, 3.939. Dollar index is pulling back slightly, 104.11. The VIX is up about 1%, 23.08. We do have a gap to fill in the hourly right around 21.30. So again, just keep that in mind. We'll go over that too. Gold futures up 0.28% this morning, 18.47 an ounce. Silver futures 21.88. That's pretty much flat. Copper futures were up yesterday, now taking a pullback, $4.18. Euro dollar is up 2 pips, 106.48. 134.56 for the dollar yen. That's down 44 pips. Again, we've talked about the yen a lot. If the dollar yen is falling, usually that indicates, again, based on the correlation, rates go down. We talked about the euro. If the euro is up versus the dollar, the correlation with stocks. Bitcoin is down 1.47% this morning on futures, 24,125. 121.05, pretty much flat for the pound dollar this morning. So Forex not getting a lot of noise this morning session. Ethereum 1648. That's down 1.38% this morning. Okay, let's go ahead and get started with the S&P 500. I sent out a tweet yesterday regarding SPX. I hope you guys took a look at it. And we talked hinted regarding the inflection point that was coming up. So let me go ahead and get that here, this tweet. So here's the tweet, S&P 4,000 level in focus. We closed slightly below that, 39.97. Short-term uptrend is coming to intersect at 39.50, which is in line with the 200 DMA. Now, keep in mind that is the S&P 500 spot index, SPX, not futures. So now we're going to go into futures. So again, we can take a look here at the 1 hour chart. We're basically at the same level we were the 31st of January. So again, if you're looking at S&P 500 futures, we pretty much read for the month of February now. Again, we had that big pop to 42.08. Now we're at 40.12. Now here's the key thing that I wanted you guys to see. Let's take a look at the 2-year, again, the most famous trend line in the past 12 months has been this downward trend here on the S&P 500. But we also have an uptrend from the bottom call of 35.02. If you remember when we talked about that bottom in October 11th, we talked about that 200 weekly MA as support. It held up very nicely for a nice pop for about 700 points since October 11th. So again, we do have a trend line up, as you can see here for my 35.02. You could see pretty much a nice uptrend there, kind of held support as we go up. And that's what we want as investors or people that are bullish, obviously. We want a nice uptrend. We want checkbacks. We don't want straight shots up because those get sold off immediately. So again, we want a nice structured upward trend of stock prices, obviously if you're an investor. Or unless you're a bear, then you don't want that. But either way, taking a look here at the S&P 500 on the 2-year daily chart. These are daily candles based on a 2-year basis. You can see that trend line again kind of intersecting right around 39.70 on S&P 500 futures. We are holding above the 50-day moving average of right around 39.97. Granted, we have not been below the 50-day moving average since the 20th of January. So really since about a month now, a little over a month now, we have been above that 50-day. Doesn't mean we can't break below it. Doesn't mean we can't bounce and hold it either. But again, that's what we're watching is those MAs. So again, we had Netflix puts yesterday and we caught them. Well done, team. And we did AMD puts last week. The Apple calls that we had as well from last week, they were the 160 calls. We had to salvage something. We had a little pop in the morning, but again, you had to salvage some kind of premium because it's too far out of the money. We had that New York Post headline talking about contractors getting laid off in terms of Apple contractors. So that's what we had in Apple. So at least the Netflix put we caught, but even with Netflix, those put premiums were very, very slow. It is very difficult to short this market since all of the flow that I have noticed, all of the action has been on these 0 DTE, 0 days to expiry trades. We're starting to get that skew into that very, very short time frame for traders who are trying to catch these quick moves where time is not even a factor to them. They just want to catch it immediately and close same day. So we're getting a kind of a skew there. Again, the Friday puts we had on Netflix, again, those were running very, very slow. Usually when you get a nice flush that we had yesterday on the Dow and the S&P 500, remember yesterday, the Dow was down 2%, the NASDAQ was down 2.5%. If we flip that narrative and say, hey, what if the market went up 2.5%? What if the NASDAQ was up 2.5%? Where would Netflix go? How high would Netflix go? Again, would we catch that even quicker? More than likely, yes. Have you noticed in terms of the market when we get upper momentum, options market tends to catch on pretty quick in terms of calls? Though, again, I've traded both back and forth this year. And again, I've noticed that the call options have moved quite quickly with momentum rather than downside. Now, downside momentum was more at, give me a second here. Good morning, guys. Sorry, I had to put it on the chat again. So in regards to the market in terms of upside momentum, that has been stronger. And the best stock I can give you that example where the option market is really moving the stock is Tesla. So when Tesla call options are very, very strong, it's almost pulling the stock higher. Now, again, in turn, you're not getting that on the put side where you get a bunch of people piling onto puts. Really, the put call ratio wasn't even that high yesterday anyway. So again, we did have an index fall, granted, but again, you didn't see that fear. Now, granted, you may think, whoa, we had the VIX as high as 14%. But again, that is skewed with the 0 DTE expiry, the same day expiry, next day expiry, options trades like SPX and SPY. So that's kind of skewing the VIX a little bit. So I wouldn't put that much emphasis, at least in terms of VIX being a fear gauge. Now, again, volatility is one thing. Again, when volatility is higher, implied volatility is higher, then again, depending on the direction you're looking of the option, it's going to be a little more expensive. So again, if you're someone that's looking for contracts that are cheaper relative to the market, you have to play turnarounds. You have to play change-ups in a sense where if the market is going higher, you're looking to fade it. And if the market's falling, you're looking to go ahead and buy calls. So today, are you looking to buy calls is probably the question, I'm sure. And we're not there yet. Really, again, I'm looking for that retest of that trend line. So again, could we get to that 39.97 50-day moving average? Absolutely. The real key support, guys, is the 200-day moving average. We have been above the 200-day moving average now for about, in regards to sessions, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, and 22 and counting. That's 22 days consecutive of us being above the 200-day. After a 20% or more fall the year before, as long as the 200-day holds, the longer period it has, the more likely in terms of odds and chances, seasonally and historically speaking, the market goes higher. We've talked about that seasonality. So let's go ahead and go over something rather quickly. Again, the seasonality approach. Let's go and bring up this again, and I'll bring up the seasonality chart. I don't want that. I don't want these arrows. That's not what I wanted. Here we go. Okay, here's the seasonality. And again, it's pretty much following that same script so far. A very nice January, nice pop in February, and you get to see towards the tail end of February, yesterday being the 21st, we had a nice flush. Could we continue to go down? Absolutely. But again, look towards the tail end of March, the tail end of February into the beginning of March. Started getting a nice little pop. Mid-March, we get a fade, and then we rally towards the tail end of March. March and April tend to be bullish months, at least according to seasonality. So again, as long as that script kind of holds, and again, it doesn't have to, again, you're looking at levels where you're probably buying the dip. And again, I've talked about this back in January. As long as we're above 4,000 until further notice, dips are going to get bought for the most part. Now again, unless we break the 200-day, which is 39.49, that is the key level you're watching. I'm not worried about that 50-day because I want to see exactly where we close. The close is key. It's going to be very difficult to try to catch puts. I was looking at doing QQQ puts yesterday, the 293 puts for this week, and I didn't pull the trigger just for the simple fact that, again, a quick turnaround next day was probably to be expected. Again, you start getting some oversold readings. We're oversold on the 2-hour chart, on a 4-hour chart on the S&P 500 futures. Geez, that sucks. What happened here? Let me see if I can bring this up. Man, I just had it to. Let's see if I can bring this up. Wow, I just had it and it just disappeared on me. Can you believe that? What is this? There you go. That's what I wanted. Let me see if I can bring this closer. There you go. It's just minimized. The worst. Okay, so this is what I use for my other screen. Excuse me. I just stare at S&P 500 futures, the level 2s, and all that jazz, and time and sales. But take a look at the 4-hour chart here. We are now on an oversold on RSI. We haven't been this oversold since, I believe, the 19th of January. And again, right on that trend line, we bounced. So again, it doesn't mean that we have to bounce today. No, but again, it does mean you have to be very tactical and very patient. You don't want to rush into puts. Yesterday, the market was telling me that put option premiums are running extremely slow. You're not getting a ton of demand. Now, again, you may think the market will fall tomorrow, and that's fine, or next day, or forever. Maybe we just go to 2,000 is your opinion, and you think that the world's going to end. Fair enough. But again, the market is not pricing in or even having demand for put options. Why? Because I traded put options yesterday on Netflix, which is a pretty high volume stock, especially high beta, and that was running dog slow. So again, don't be surprised today if we hold that 50-day and possibly bounce just to frustrate traders. It is a short week. Don't expect much. We talked about that yesterday. And again, maybe we stay around 40.25 and 40.50. Maybe we get back to this trend here, this support around 40.57. We are now oversold in that 4-hour chart. That could be bounce level territory. So again, you're just watching today. Now again, I wouldn't go long yet either. Again, we would need to get above 40.50 or so to even taking a look at a possible turnaround. But even that, I would be a little bit hesitant. 41.01 for me would probably tell us that we're pretty much out of the downward trend. That's your 20-day moving average. Again, what we talked about is our momentum indicator, at least on the daily. But again, that 50 moving average, if that does break, I'm going to be targeting that 200 moving average level for a possible bounce. And then right at that 200-day moving average, I will start taking a look at some upside calls. Those calls would be a lot cheaper based on relative to puts. Implied volatility will be skewed to the downside, not the upside. So again, we're looking for turnarounds. We're looking for a trade where we can get either cheap calls or cheap puts to cash them in on a short week. That's kind of the view that we're watching for the market. And again, take a look at the technical levels. Again, we get Fed talk all day, every day now. It seems that it's just every single day the Fed is going to keep talking. Even non-voters are talking, like Bullard from St. Louis is talking today. So again, keep an eye on your technical levels. See if the 50-day moving average does hold. If it doesn't, we're taking a look at puts, possibly to target 39.49, which is your 200 moving average. But today, I expect us to kind of chop around, not even give us an opportunity. So again, I'll be watching very carefully. In the morning, right around 9:30 to around 11, that first hour and a half of trading, it was very, very, very choppy. So again, kind of wait around and look for your target. See if that 50-day moving average holds. If it does not, then we'll take a look at puts. If it does, then we'll see what we move forward. But again, I am not rushing to do anything. This is the reason why I didn't do cute puts yesterday, even though I really wanted to. Good morning, Carlos. That's Zoom Balloon. Good morning. Google 39 call, AMD 75 put, and AXP 160 put. Thank you in advance, Carlos. Let's take a look at it. Google 93 puts. Let's go and bring up the daily. Well, again, you'd be in the money, so I probably wouldn't want to trade. Oh, excuse me, that's calls. That you're looking at puts. In terms of Google, take a look at the hourly. You're still below the 20 moving average. I would not, you're too close. If anything, you're probably looking around the 95 level. There's a gap to fill on the 1 hour chart, but for that you need to break above 93. So Google doesn't have a ton of really edge there, at least to the upside yet. If anything, it's still the downside, and you're looking at this gap fill to around 89.48. If we break that 50-day moving average, Google is on my watch, on their watch list for this week. We're going to keep an eye at 89.48, if not 90 puts for Google. Let's take a look at AMD. AMD we played last week. Remember, there's still a gap to fill here around 75.37. This was a one that I had a runner, and I was watching that all day yesterday. And again, the stock was down yesterday, mind you. It wasn't green. And those premiums were hit with theta because we didn't have the market open on Monday. We had these on Friday. We caught them on Friday for 30%. We have not even tagged 25% on those AMD puts, yet the stock was lower. What does that tell you? Demand is not to the downside, at least right now, unless we start breaking some key levels. So buying puts, at least buying some time, it's not in demand. It's kind of like buying a watch that you're trying to flip or sneakers you're trying to flip. You may love it. You may think this is my favorite watch, this is my favorite sneaker, but what is the market telling you? Are they willing to pay you top dollar for those puts? Are they willing to pay you top dollar for those calls regardless of the momentum, right? And they're not, because we're seeing that AMD and Netflix puts were running dog slow yesterday. We're watching that yesterday. I was letting the blog know and everything. So again, I'm sure the Bears are cheering yesterday about the move. Fine by them. But again, the put option premium in terms of demand was just not there. Let's go ahead and again, AMD, I'm still watching that 75 gap fill. But again, we're bouncing a little bit this morning on AMD. As you can see, futures are higher. We do have NVIDIA reporting earnings after the bell. AMD might be a big mover with that. Micron, TSM, which is Taiwan Semiconductor. Of course, NVIDIA itself will be moving, and Qualcomm. So again, if NVIDIA has great earnings, great forecasting, possibly we get a nice little pop in NVIDIA, AMD will go with it. And if not, and NVIDIA falls, AMD will probably fall with it because they're in the same sector. So keep that in mind. I would stay away from AMD until the earnings report for NVIDIA is out. Hope that answers your question, Young Jay. With your red horizontal lines, do they just tops and bottoms on the daily chart? If you're talking about the lines, the horizontal ones, those are Fibonacci chart levels. So again, I don't like to base everything on Fibonacci levels. That's not my thing. Again, it's just, think of it as navigation in your car. You know how to get home, but it may give you a little bit of a shortcut here and there. So don't try to put too much emphasis on Fibonacci levels because they can be changed based on the actual time frame that you're using. You could use it for a 5-minute chart. You could use it for a weekly chart. It just depends on the person. What I want to see, obviously, is trend lines, and I want to watch moving averages. Those two are the things that I watch the most. Would you pick Amazon or Alphabet? Thanks, Carlos. And if you're talking about Amazon and Alphabet in terms of investing, I think both are fine. I think Google's in a better cash position. They don't burn as much cash as an Amazon. Amazon is between two. Are they a retailer? Are they a tech company? I mean, you pick. I mean, you have AWS, which is the cloud that they have, and then you have their retail side, which again is very labor intensive with their warehouses and their logistics. Google doesn't have that. Google is all cloud, it's all YouTube, it's all search engine. So again, in terms of what's going to be a better bang for your buck, I think Google will be, or Alphabet, because of their actual margins and lower employment costs rather than Amazon. Nothing against Amazon, but again, consumer discretionary. If you start getting a little bit of a downturn in employment, Amazon is going to be affected immediately, while Google itself has better margins. They're more online. They don't have a store or anything like that. They're not based solely on the labor market and consumers buying stuff. So again, kind of two different things. I think Google would probably be your better bet. Nothing wrong against Amazon. I do love Amazon, but again, I think Google would probably be the better bet. The only thing that Google's taking a hit is that Microsoft is eating their lunch with AI, and that's kind of the new thing nowadays. AI is the new metaverse now in terms of how excited people are, which is fair. I mean, AI is kind of interesting. We've all seen Terminator 2 and how Skynet affects it, so we're not going to go there. SPY calls. Let's take a look at it. We'll take a look at the hourly chart. We don't have any gaps. Oh, actually, we do have a gap here right around 406.95. So I think you can go ahead and take a look at the, 394 calls, which gets us to the level that we were. Let me see if I can bring up the 4-hour. Probably gives us a little bit better clarity. We haven't been to that level since right around, let's see, 392. We haven't been there since right around mid-January. But again, if you're taking a look at the 4-hour chart, you can see that nice support that's held up so far on the 30th of January. We checked back that whole move. Remember, the beginning of February was FOMC. So all we did was retrace the whole FOMC move. Let's see if we hold that support. In terms of SPY calls or puts, I would hold off until now, until we see some actual momentum. I prefer that we go calls if we get that turnaround, because those calls will be cheaper while the actual put call ratios have been obviously depressed, but not too depressed. But again, calls would be cheaper for us and give us more bang for our buck. But again, if we do fall more, then again, I'm wanting to actual follow the money, follow momentum to the downside. But if the put premiums hold up. QQQ puts or call targets. Let's take a look at QQQ this morning. Taking a look at Qs, look at this. We broke that double top that we had on the 4-hour chart. Now we're back at levels not seen since February 1st, which was the FOMC day. Powell brought us higher to right around 315. We checked back. Now is this support? We've always talked about how resistance becomes new support, right? When it comes to a new cycle or chart or anything like that, when you get a breakout or breakdown. But again, 296.87, if we can recapture that, just another $2 move, we can take a look at possibly the 300s, but on a short week, it's going to be a little difficult. So again, I'm not exactly getting too excited to trade Qs either. It's going to probably be one of those days where you're just watching the market and seeing where the price action goes. Again, short weeks, I hate them, but I love them because you have the day off. But again, I hate them in terms of volume. The volume is very dry, guys. The volumes this week, not the best. Not the best to trade, to be honest. Are you adding to your long-term portfolio anything in this range besides normal buys, Google, Amazon, Nvidia? David, I love the question. The reason I want to say this is that this has shown you it's not an investable market yet. It just isn't. And I've said that really since January. It's not there yet. You need to get above 4,200. 4,200 would be 20% off the lows. That would be a new all-time high. Obviously, it's no secret. That is exactly the resistance. Once we break 4,200, that, in my opinion, would give us a green light to start looking at some buys. But again, all you're getting is chopped. Right now, as of January and February, it is a trader's market. That's all. Investing here will just make you lose your mind. If you want to make it simple, dollar cost average what you want. But again, we're just not there yet. We don't have the clarity. If we get above 4,200, again, that golden cross holds up. That's a 20% move above the lows. That would be considered a brand new bull market. That's what we're looking for. 4,200. We are not there yet. Thank you, Carlos, for your informative analysis. It's so helpful. Good luck to your trading today. Hey, I appreciate it. As always, thank you, guys. Again, it's so important to go over these figures and to go over these charts because this is what gets you prepared for your day. I don't want anyone to be surprised. We talked about that last week, that this week would be weaker. There was no reason to be surprised on yesterday's price action. It doesn't mean you have to trade it, but you're not surprised. You're already expecting that. Now, again, we talked about how maybe that PPI and CPI number could have got us to retest that trend line, and we didn't. We held up. But again, you can see the nice upward trend. These dips have been bought. And until further notice, maybe if we break below the 200-day moving average, that's really when the only things would change. Again, we still have that golden cross, that 50 above the 200. We are below the 20. Momentum indicator indicates down. But again, that trend line looms. If not, 39.50 would be the next support. Let's see if we catch it. But if 39.50 does hit, I'm definitely looking at calls. But as of right now, it's not much to do. And it's okay to say that. It's okay to say I'm not sure. Everyone wants to be for sure on something. There is no such thing as a sure thing in the market. It's all probabilities because anything can change. Any headline could come, whether it's weather, whether it's corporate, whether it's Fed, whether it's economic, geopolitical, anything could change your view on the market. Price dictates sentiment, as we know. I mean, it was all good just a couple of weeks ago. Now everyone thinks the world's going to end. Welcome to day trading. Doing this day in, day out is not easy. It's a poker game every day. And again, cash is a position. Don't forget, it's okay not to trade every day or a couple of days. It's okay to just watch, observe, write your notes. And also, guys, if you are doing something that maybe you have something in part of your trading plan where you kind of want to try a couple things, it's kind of like taking a basketball to the gym and you just want to play by yourself. This is where you do the crazy shots, you do work on your fadeaways, your hook shot, whatever. Again, use demo if that's the case. Demo on TOS if you want, and you can trade the way you want. You can start back testing. You could trade different things that you're watching, whether it's futures, whether it's options. Again, sharpen your shank. Get better on your trading. Get that screen time. The more time you put into this, the more you'll receive out of it. If you treat this like a hobby, you will get paid like a hobby. If you treat this like a business, you will be paid like a business. That's all I wanted to say. Have a great rest of your morning. I will catch you guys tomorrow for the morning note. Let's make it a great trading day. Happy Wednesday. We will see you guys tomorrow for the morning note. YouTube, 9 a.m. Eastern Standard Time. Cheers, everybody. See you then.